Welcome, welcome. All right, so next up we have Benjamin DeMarco and David Rudduck. Can you still get cyber insurance? Should you? What do you need to know about the market? So Ben has over 14 years of legal and advisory experience specialising in cyber risk, privacy, technology law, financial insurance, and dispute resolution. He has acted in over 300 data breaches, providing triage, privacy, strategic, and claim support to companies. For over 20 years, David and his team at Insane Technologies have been protecting small to mid-sized businesses. David and his team provide assessment around and education, protection, and response services for businesses throughout Australia and New Zealand, from the beautiful Gold Coast. Well, not this week. All right, so can we have a warm round of applause for Benjamin and David? Thank you.
There goes our intro.
Thank you very much for those kind words, and thank you everyone for coming to this session. We appreciate that when you get to hear about the FBI and the NCA, there's a bit of competition for attention, but we'll try and keep you interested and engaged while we go through the myriads of cyber insurance. So in terms of our presentation today, you've got some quick intros from the two of us. What we're going to be looking to cover is a little bit about what's going on with cyber insurance at the moment, why there's a lot of negative publicity, negative headlines, what's driving the insurers, what's driving the market. We also want to talk about some of the key challenges just in terms of the current risk and the exposure landscape. Following on from there, we're going to give some strategic advice about where cyber insurance is appropriate, where it isn't, how do you think about cost benefit and those types of tensions. And then we've got a couple of different statistics and case studies just to share with you on the current state and also some questions. So with that in mind, I think we'll dive in and you can cover the first slide, David.
Yeah, cool. So why are we talking about cyber insurance? In fact, in the last couple of days since I've been here doing tutorials, there's been a number of organic conversations that have talked about the fact that, oh my God, my cyber insurance premium has raised infinitely. And people are getting quite cautious about this. I don't have to go through all of these little excerpts to give you some of the reasoning behind that. But there is still a value in cyber insurance.
So moving on, everyone will get the slides. This is quite a content-heavy presentation, so we're going to cover these points relatively high level. I always get a lot of questions about what does the insurance actually do, how does it fit into a program, what does it mean for civil liability or property? And what I say to people is there are three main issues that you will be relying on cyber insurance for. The first one sits under what we call a first party cover. First party means your own loss, so what we need to do to make you whole. And in there you'll see we talk about breach response costs. So the reality of a modern breach is there's a bunch of work streams you've got to manage. There's a series of costs, there's a series of vendors that you bring in. Typically it's lawyers, it's forensics, it's crisis comms. Sometimes we look at specific bits of cybersecurity expertise depending on the nature of the attacker and what you're dealing with. The insurance essentially has embedded a breach response cover. You can call a hotline, you're connected to these vendors, and the insurer will pay the vendor's costs once we've eroded your deductible. As well as that, we've got some other covers for your direct losses. So there's a strong BI cover that we see a lot of clients rely on now. We'll talk a bit about that later. Data restoration costs is a huge issue at the moment. The historic view is particularly if we were cloud-based, we could tend to pull everything out, spin things back up again, and we'd be back to normal in a couple of days. Doesn't work anymore. Attackers are much better at knocking out cloud capabilities. We're also seeing a lot of tensions around backups. So often there's a combination of manual recreation. We also see with the on-prem, the costs and the expenses can be really significant, particularly if there's a legacy component to it. Again, I won't go through all of these, but I do want to also mention on the third party, we see a lot more litigation risks and a lot of claims that follow from a cyber event. Privacy regulation is probably the most common. We had the comment before around the fact that privacy is a global series of laws. You even see relatively small size Australian organisations having to worry about global compliance. So GDPR is based on the data subjects you collect data for, same with the US laws, same with the Asian laws that are emerging. So privacy costs and the privacy regulatory expense has grown a lot. I'll also talk a little bit about some of the network security liabilities. This was historically a US problem. So what would happen was if a virus went from your environment or a piece of malware to a client, that could be the basis for a litigation. It's a tough one to cover because it doesn't have to be a breach of a professional service. It could just be an administrative failure. It could just be some part of the basic backbone of what the organisation is doing. It can be hard to cover with other policies, and if we want to cover that risk, we've got to do it through a cyber liability policy. Again, that's it as a bit of a nutshell. Very, very quickly, I always get asked by clients if I think about my losses and my expenses and the key things that are going to impact me, what is the policy covering? We kind of use this wheel because we think that the two biggest issues for Australian organisations at the moment are financial business interruption from a cyber event, and the cyber liability policy is specifically designed to get that, as well as that the costs from cyber extortion and ransomware have just skyrocketed, and the cyber policy is the only one that's going to pick that up within your own insurance program. I'll cover just a couple of these. Data exfiltration and publication have a lot of additional losses that sit around it. If it's exfil, we've got a privacy issue, we've got a lot of different stakeholder issues. We see a lot more risks around contractual liability where we have exfil now, so the covers for that are historically going to live within the cyber liability policy. The other two I'll quickly mention here is some of the issues around reputational harm. We don't tend to see as much customer churn in this region as you do in the US, but what we often see is there's a lot of additional work and support you want to give key clients and stakeholders to make sure that they don't leave. That is a mitigation cost, and also in terms of BI costs can be covered within the cyber wording. Last one that I'll just mention here is people often talk about funds transfer, payment frauds, the type of social engineering attacks. Cyber policies don't cover that, some crime do, but we do find that the cyber policy is still very useful because where you have that, there's someone malicious in the IT environment. We need to investigate it, we need to understand what's going on, and those investigation costs, doing the root cause analysis, it's the cyber policy that's capable of picking it up. So that's a bit of a nutshell of how most organisations tend to touch or rely on the wording. I'll cover this one quickly as well, but essentially within the insurance context, one of the frustrations that we've got is cyber liability is a very new type of insurance, and the thing we often lose sight of with insurance is many of the risks that you have within your insurance program are very, very old, and because of that, they're established markets. There's hundreds of years worth of data. We know the risk, we know the exposure. I've given you some examples of some of the common insurances that you'll see either for yourself personally or also for your businesses. So property and fire, what we call now property ISR, pretty much every organisation has it, either as a package policy or by itself. What we don't realise is that's an insurance product that's been around since the 1600s. We know about it, we know about the wordings, we know about the issues. We've talked about life insurance. Again, you can trace life insurance back to the 1700s. Even motor, which I've listed up here, which we think of as something relatively new because, again, the technology and the availability, the first motor policy is over 120 years old. So there's a lot of data, there's a lot of knowledge. When you start to shift that to cyber, cyber really spins out of the types of technology insurance products that the big banks and some of the big US tech providers needed. That happens in the mid to late 90s, depending on who you speak to. So that's the first iteration of what is the backbone of the modern cyber policy. The policies we talk about now, they were completely different. They're modular, they've got ransomware cover, they've got BI. That doesn't actually happen until about 2002, 2003. So when you look at the shape of the insurance, it is still emerging. It is still one where both the risk class is changing, but the experience that insurers have, it's catching up. As David politely said, if you took cyber insurance in terms of human age, it's barely allowed to drink. So that context is quite important.
In America where it's 21.
True. I'll cover these very, very quickly, but essentially, if you look at why insurers struggle so much with this and some of the tensions that they face, claims data for cyber insurance is still an emerging area. Even some of the oldest data sets only tend to go back about 15 years. Compare that to other lines of insurance, exposure is much harder to understand, the tails are much harder to understand, so you can't rely on the claims data just to build your rates and what the expenses are going to be. The premium pool has always been relatively small compared to other insurance classes. We currently think the Australian premium pool is somewhere between 140 to 180 million, changes depending on who you speak to. But if you compare that to a lot of the other classes, you can get close to 500, 600, 700 million. So because of that, if we have a major change in frequency, if we have a lot more cyber events occurring or a lot more losses, the premium pool has to grow very, very quickly, so rates have to change. Last one that I've talked about is the evolving response. A long time ago when I first started doing incident response and working with carriers, most of the expenses were legal expenses for privacy or forensics. Now, as we'll talk about later, BI, ransomware expenses are by and large the biggest. That's a whole new different type of loss profile that the wordings weren't really picking up 6 or 7 years ago. So it changes the data, it changes how we understand it. And also, we're in this really unusual place where cyber is responding to what you do on the data side, on the security side, or on the tech service side. The regulations for that are constantly in shift. Even now this year, we've got the SOC reforms, we've got the CDR rollouts, we've got the privacy code, we've got a whole host of new issues around consumer protection for tech products and services. Because the wording has to respond to those risks, it just shifts and it has to change with the SANS, and that's why price can be dynamic and coverage can be very dynamic. And again, simply, because of that, carriers have to be constantly thinking, who are they willing to insure, what conditions or controls are they going to apply, and what's the price? That's why it kind of shifts and changes so much. This one I'll cover for you very, very quickly, but what happens when you see the cyber insurance industry is there are a series of kind of seismic events that land, and that changes what carriers do. So the covers that they'll give, what the costs are going to be, what the conditions are. And I'll work you along these, but I'll start at, I suppose, 2018, 2019. So that's when we see a lot more of the regulatory stings start to come in. That's where you see some of the big GDPR fines. That's where you see some of the real risks sitting around the CCPA come in. We talked about the fines against Google, Facebook. We've talked about some of the issues in terms of the various regulators across the globe that are looking at these issues. But as those losses start to come in, we get a completely different profile for the third-party claims. Ransomware had been around for a long time. The oldest ransomware claim I'm aware of that a cyber policy responded to is 2004, but you can't call that modern ransomware. In that case there, it was a $20,000 US type of thing that they were demanding. Big game hunting, at least in the insurance side, it really lands in mid-2020, and then it just keeps accelerating. And we've got some stats on this later, but the losses of ransomware are nothing like what the market predicted or what they could have thought about 3-4 years ago. Supply chain we'll come to later. It's been a huge issue, both because of the size and the scale of the problem, which insurers probably weren't across, but also because when you have a supply chain breach, we can't really have confidence in internal controls. Some of the monitoring and some of the behavioural might be able to do it, but supply chain is just this gaping weakness really for even some of the most mature organisations. And we've seen just some huge supply chain cyber attacks. We've talked about SolarWinds. We've got Acelion up there. Obviously, Kaseya was a big one, and there's even been some reference to Okta and some of those types of things that are going on. I'll cover this one very quickly. A lot of those issues have stabilised, but there are a few emerging points that we're trying to get to grips with. One is what to do with state-sponsored attacks. Obviously, that's slowed down a little bit since the Russia-Ukraine war, but there's an expectation that they will come screamingly back towards the end of the year. How do we think about the war issues? We don't think there's going to be another NotPetya, but those issues have to be live and have to be understood. And what if there is retaliation action that hangs off a war-like operation? Again, if you want to speak more about that later, we can talk about it. There's a lot of nuance in terms of what the market's doing. And the last one is we think there's probably a cat risk associated with cyber. By that I mean that if you think about floods or the traditional ones, the catastrophe is what we need to be worried about. It's the fact that we could have thousands of losses being triggered either because of a region or some type of seismic claim. Cyber insurers didn't aggregate like that historically, but all the data is pointing towards we have to think about that because there are much more common points of failure, and we're also finding that there are a lot of common vulnerabilities or 0 days that can actually spread through supply chains very, very quickly. Told you about rates there. There is rates going up. It can change a lot. Comes down to your security, your industry profile, and also what we can do to explain your own maturity. That's me. On this slide here, I've got for you some key elements of losses. This is based on a report that we put together for all the claims that Willis saw in 2021 globally. There's about 4,500 claims that sit amongst that. On the loss tail, what we found was business interruption is consistently the highest loss for most of our organisations. That's either through lost revenue or increased costs of working. We've also found that the payment of ransoms is becoming a really significant component of the loss. That'll be a common theme we'll play with a few times, but the thing I just want you to understand is those aren't elements that would have historically been part of the exposure profile, and it just shows that how we understand the way this impacts businesses, the losses and the support they need for cyber insurance is moving very, very quickly.
Yeah, so going on from that, if we look at statistically the number of claims that have come through over time, we are seeing an incremental increase concurrently year on year, which you can trend, but if you consider the fact that this is still an emerging risk, there's still really no control as to what's causing these ongoing increases.
On the ransomware side, I get this question a lot, how do we think about ransomware losses? So these are all of the WTW clients we've had globally, and you can see the track of what was the average demand that was made against them and what was the payment. The demands are still going up year on year that we're seeing. The payments are still pretty static, but you'll see now that if the average ransomware payment is scaling between that 1 to 2 million, because of the frequency, because of the amount of losses, the whole total of ransomware as an exposure and what it means to industry and organisations has just gone up. I should say this is US data. our Australian data is showing that the average ransom payment's somewhere between about 900k Australian to 1.2 million Australian. So we're not quite as bad, but we are starting to trend up.
Yeah, ironically, while we are historically seeing higher costs on each claim, we are actually seeing either the claim volume, so the number of incidents being reported or the number of claims being lodged, either stand pretty steady. This is data from CFC, which is one of the insurers. They're actually seeing claims volume drop, although other industries are also seeing it stay pretty stagnant.
So we wanted to very quickly talk about some of the factors that you should consider when you're trying to look at whether insurance is appropriate or necessary. The first thing that I say is we've got to keep the context of you as a business. Cyber insurance is expensive at the moment. It isn't always the only answer that you need cyber insurance or that you need big limits. And one of the things that we say is cyber insurance should work as part of an overall risk management strategy. And when you start to look at that through the lens, we've got to think about your exposure, both from a quantum but from a key risk type of perspective. And so what we see right now is across different industries, some are just absolute targets and flavour of the month. We should have that as a bit of context. We should think about how developed your IR response is, how developed your BCP processes are. We should think about BI, legal and privacy. And a lot of the modern cybersecurity frameworks are starting to bring this in, but I think you should have this joined up to insurance. And the thing about insurance is I think it should be tied to how you understand situational awareness, because it's your exposure, it's your support needs, and it's how does the policy come in for you that's the critical question. So again, I think always start with this as a bit of a backbone and you'll make much more effective decisions. I get a lot of questions around don't you need insurance? My answer is it depends, but there are a lot of common factors that you should be thinking about. Some organisations have a simpler exposure profile, a simpler incident response profile. So often that comes down to what type of personal information and third-party data are they holding? What are customers or stakeholders going to do if we have a cyber event? How closely affected are you by the legal and regulatory issues? And what's going to actually happen from an operational perspective? And we've got a number of organisations that can answer that and go low, 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 low limited. Well, that points to a smaller need for cyber insurance, or maybe the idea to self-insure and not buy a policy. I've talked about irrelevant factors, and this comes in a lot at the moment. So I get a lot of reference to people saying, well, we've done all this controls, we've done all this uplift. That's brilliant, but the insurance covers something different. The insurance is what you rely on when you have an incident. It's how you bring in the vendors, the support parties, how you try and make the business whole, and also it's how you think about the third party and the civil liabilities. And insurance is one of the only tools that you've got to actually think about that pure recovery position and also to give you general support across the response steps. For those who are worried about losing control, what we essentially say is it's your breach, you control it, it's your vendors. If you work with the right broking partner, all of those issues can be managed. Insurers do play claims. I can give you a whole bunch of proof. I've personally worked on over 10 matters where the insurers paid out in excess of $10 million. The losses are real. The reason why premiums are going up is because of just how significant the financial harms are that sit here. And the last one is in terms of if you can or can't obtain insurance. We'll cover this later. Pretty much all organisations are insurable at the moment. You've just got to do the work on the proposals and in terms of the strategy for how we communicate security. I've given you some ideas on when I think cyber insurance is very, very important. A lot of these will be common in terms of how you think about risk assessments. The two that I just want to highlight in is how we think about technology dependency. If there is a cybersecurity event, key assets are unavailable, key systems are unavailable, what's the loss? Because in that type of situation there we have a much clearer idea of business interruption. The last one that I'll mention here as well is how we think about expert vendor support. Insurers have a full incident response panel that they've developed. The rates are better. Typically the levels of service they get are better than what you can negotiate individually. So there are real benefits in terms of using this to augment incident response from the cyber crisis management side.
I'll probably add on that as well, like in the middle of an incident, do you really want to be trying to work out who your panelists are? For most small to medium business, small to medium enterprise, it's not something they've had to consider. The cyber insurer is motivated to have gone and pre-picked them unless you are mature enough to have picked your own panel for IR or whatever. And I think a lot of people forget that cyber insurance is more than just an insurance policy that you get your money back on BI and everything else. It gives you, in essence, access to the panel beater who's going to help repair your business and also work out who is at fault. But in trying to work out whether or not cyber insurance is appropriate or necessary, the insurers are trying to assess maturity of each and every applicant for the policy. And the problem we have at the moment is they're playing catch up. And so they're looking at what's caused a claim after a claim, what controls may have helped resolve that. They're trying to work out, are there certain frameworks we should work by? And as you, as an insured, should also be trying to work, is there a framework we can align with that actually helps us closely align with what our cyber insurer is looking for? And there may be a need for you as a mature organisation to demonstrate that you are actually mature by doing regular pen tests or at least security assessments to show that you're thinking about the requirements. And a question I get asked all the time is, do we need ISO 27001 or any of the other certifications? And for the most part, that's a tick and flick exercise, and it actually doesn't align with what cyber insurers are actually looking at as causes for claim volume. You might need that for regulatory compliance in other aspects, but it may not actually get you to where you need to be a low risk insured.
So for the next couple of slides, we're going to talk about what are the controls insurers are focused on and what's the reason why. And some of these are very similar to what we'll see with Essential 8 or NIST or ISO. But in my mind, there are 8 things that insurers really are sensitive to at the moment. And this is because insurers have seen where these controls fail, they actually cause losses and they cause significant events. Access management is very much front and centre. Again, they're not going to prescribe types of technology, but they do want to see some approach to privilege access management. And also we're really worried about the local admins, the domains, those types of accounts. What are the controls there? Are they just-in-time credentials? Asset management is an interesting one in that what we find is for a lot of organisations, if they haven't done the asset management work, when you want the incident response providers to come in, they have no idea where stuff is. So the triage is much slower, the preservation is much slower, how we look at elements of the restoration is much slower. So the work we can do then to get that visibility, to get that inventory. Segmentation, again, common issue. Insurers are very much focused on that, I think particularly around some of the issues that we're seeing with cloud at the moment. Active monitoring, a lot of insurers as you get into a more secure state, they will want some type of SIEM or SOC. They're pretty vendor agnostic. They're also agnostic on whether it needs to be in-house or whether it can be outsourced. MFA is central for all the carriers at the moment. They want it on critical systems. Most of them want it on universal rollout on 100% of endpoints. EDR we're aware of, phishing training. The last one I'll mention is backup processes. This has been something that we've seen shift in the last 12 months. Insurers were quite light touch on what they asked here. Now they want to know things about, are backups encrypted? What's some of the passwords that sit around it? Are they actually immutable? Have we done point-in-time restoration? How have we thought about on-site, off-site cloud? And you can comment on this, but I think the main reason is ransomware losses are completely different depending on when we've got reliable backups or not.
Yeah, 100%. I mean, you think about from a BI perspective, business interruption perspective, if you've got a backup that actually works and you can pull down pretty quickly, then business interruption is going to be minimised. And no two backup is created equal. A lot of businesses will still use tape backups, and of course, like the old VHS, there's no guarantee that thing will actually work when you go to use it. The same with cloud backups. No two cloud providers are the same, and we've seen on some of the incidents we've worked where all of a sudden they've gone to restore from their U-Boot cloud provider and it trickles down, or there's no option to have a disk sent out to them rapidly so that you can try and restore. And now we're going back to try and recreate everything, and it ends up with this cost that the business wasn't expecting, all because they cheaped out on the backup system.
What we wanted to do for the next few slides is try and give some context on why insurers ask a number of the additional questions that they do. And this is some work we've done internally within Willis Towers Watson, but the thing that we've mapped is there are certain claims that insurers have paid out a lot on, and you can very quickly map the controls and what they're trying to do to those types of claims. There's been a bit of talk about supply chain. Is there anything that you want to add quickly there?
Yeah, I mean, supply chain's a hard one. We've got an MSP at the moment that's been hit, and they are becoming an uninsurable risk because of the level of information they store. But how do you grill your supply chain? How do you find out whether or not your supply chain is actually doing security tests and everything else? Even this morning we heard from Okta, they're in damage control at the moment due to a supply issue. And it's going to be a growing problem that we continue to see evolve. I agree with Brett Whitterford that if anyone works that challenge out, I think we'll all be winning. But if we look at the supply chain attack, some of the key things that they're going to start looking at is, are you actually examining how they access your systems. From an MSP, for example, we see, because MSPs aren't a regulated industry, we see a lot of MSPs who aren't using MFA to remotely access their clients' environments, shared credentials, maybe they're overly exposed or not updating their systems, or there's no lines of demarcation or network segmentation between them.
And the two bits that I'll add on my side is there is a lot of emphasis around understanding what are you outsourcing, who's it being outsourced to, what are the processes and controls. And this has been a bit of a surprise to me in that even in some of the really heavily regulated industries, they don't have clear ideas of, okay, well, we think it's kind of a HR function, well, what's actually happening there? So that visibility, that understanding of the MSP relationship and kind of getting to some of the business purposes, because again, if we know what data they're holding, why they're holding it, what the impact is of the business, we can understand much more what the risk is if that MSP goes down from a cyber event. Last one I'll mention is the patching cadence. You'll see this come up a few times, but I think for insurers, what has really surprised them is we get a lot of cyber events that are caused from what are known CVEs. In some cases, I've seen some massive ones where they've been CVEs and the remediation's been reported for 365 days. That is just something that has kind of set insurers off because it is preventable. There are some challenges with visibility, but that is a very, very big issue, and we've got to show those elements of the patching cadence, particularly for critical CVEs.
Yeah, I'll just add on to that. Some good examples in the last couple of years. Obviously, when everyone went into the work from home environment, RDP, getting a remote desktop protocol being popped, was a really common affair. Then the threat actors moved on to, there was a well-known firewall vendor that had a CVE which allowed the password database out of the firewall to be pulled out of memory. And all of a sudden we saw any client who had that particular brand firewall get popped because the IT team couldn't schedule in a time to do the firmware update for the firewall because business wants to run 24/7. And that's just not good enough anymore. Moving on though, we've seen a lot of watering hole attacks. So what we're talking about there is being brought to a particular website. We saw this with a lot of legal and sort of paralegal, contractual based businesses where they would end up downloading something that dropped a remote access Trojan on the endpoint of the device, and then that threat actor would come in via a tunnel back to the head office and then ransomware the environment. And so as a byproduct, we're seeing the insurers looking at, okay, well, how are we going to train our staff not to click on these things? In this particular example, the paralegal was actually trying to speed up their work by finding a template for the contract that they were looking for and just got thrown out. We're also looking at things that are mentioned in the Essential 8, as Ben said, is like, can we disable Microsoft Office macros? You speak to a lot of law firms, accounting firms, they quite often depend on these things and they get sent these things. And yes, there are ways around configuring that properly, but there's always been a balance of interrupting business operation versus security, and it's getting to a point where we actually have to start rethinking some of those conversations because the fact that we are blocking the business from operating is not a good answer for security, but there has to be still some a little bit of a fair play as well.
And so we particularly see with some organisations that are highly exposed to watering hole attacks, there will be a lot more questions around what is the education, what's the training, how are we thinking about some of the social engineering or the malicious issues that can hang off the back of it. And that's a comment that we'll probably give to a lot of organisations this year. Historically, you could get away with saying, well, we do a once a year cybersecurity training, it's general, it's from this outsourced provider, and that'd just be a bit of a tick and flick for the insurers. Now they want to understand a little bit more because there's a difference between base education and education that's effective. I mean, in some ways this is quite obvious, but I'll let you fire.
Yeah, I mean, I just covered off this as well, open remote access. Surprisingly, we still see this. In fact, there was, again, another well-known vendor recently that prioritizes remote access. It was actually a Log4j vulnerability in this one, but we see all of these services available, particularly remote desktop, and then something like a printer account or something with a really poor password, and the MSP that we're talking to says, oh, but we have a brute force program and blah, blah, blah. And so we've got to start looking at, how do we secure these environments? I know Ben and I were talking about before, this whole zero trust world, everyone's talking about zero trust, because most businesses, when we had to go remote, just spun up VPN concentrators. And VPN concentrators didn't necessarily secure us properly.
I think the two bits that I'll add here is it always surprises me when we go through this process, the number of organisations where we'll often do a third-party assessment for some of these large ones where they do insurance, and you might have an organisation that is very cyber mature, but when we do this external assessment, there are 30 or 40 instances we find of open RDP. So it's something that I think is probably hard from the visibility side, but again, it's such a low-hanging fruit that it amazes you. In some cases, it's big financial services or highly, highly regulated industries. So again, simple, but it comes up all the time.
Obviously, credential stuffing, phishing attacks, no one's surprised there. Again, we're talking about MFA. I mean, MFA is the trend here, and education, as well as what's on the endpoint and behavioural detection-based capabilities.
Business email compromise is your favourite topic?
Yeah, my caseload at the moment, 66% of my caseload is business email compromise. This doesn't seem to be going away. And what we're actually seeing is a lot of insurers are now getting to a point where if you don't have an MFA enabled, they won't give you a policy. And it's about time, because they're losing, when they do the investigation, it's not just the investigation into how did this occur. If there is some sort of active data exfiltration and a privacy obligation, there's a huge cost that goes into data mining, notification, PR, etc. And the insurers really don't want to cop the bill on that one.
Ransomware, I'll make some quick comments and hand over to you. It's such a huge problem, the losses and the expenses. Most of the insurers have specific addendums now of ransomware controls that they want to see, and it's just because they have been burnt to death on it. So we've given you some examples here, but we often say that if we've got a large or a complex organisation, we want to communicate to the insurer what is your strategy to manage ransomware as an end-to-end risk. And where we can do that, two things I will also call out. We see a lot more focus now on testing and living the IR and the BCP processes. So that's tabletops, that's policies, that's wording reviews, that's also issues though around showing that we've made these types of processes fit for purpose. And the other one that I'll just mention too is the restoration and testing of backups. The loss tails are just so fundamentally different if you don't have confidence in the backup process.
Yeah, and just go on to the next one. To put that into perspective, we saw an average ransom payment of $400,000 in 2019. That nearly tripled to 1.1 million in 2020, and those numbers keep going up. The biggest victims to this we see are legal, financial and professional service firms. And one of the reasons there, that the legal in particular, it's not because they need to pay the ransom to get the data back, it's because they don't want to have their name published on the breach sites. And quite often they'll weigh that up and pay the ransom on the good faith that the ransom threat actors will delete that data. But almost every incident we look at, if we really dial it down, the security controls weren't the right ones, they weren't controlled, and no one was monitoring them 24/7.
I think two things I'll add. Obviously, the ransom payment is a big headline cost, but we often lose sight of the other costs and expenses. Ransomware event is where someone has had unauthorised access to data. Pro tanto, there's almost always a risk of an eligible data breach, so the privacy liability element is there. Data restoration costs are always very, very high. The BI costs are always very, very high. The contractual and the third-party costs are also increasing. So ransomware is one where if you look at the totality of a cyber event, you kind of get the highest levels of losses across the board. This is just a very, very quick slide. There's been a lot of doom and gloom. There was an AFR article published a few days ago talking about insurance being impossible to obtain, lots of doom and gloom, the market's dying, there's an existential crisis. Most of that is rubbish. What we really see is for a long time you could get a cyber insurance policy really, really easily. I answer 5 questions, I go to 10 carriers, 5 of them quote, I pick the lowest. And that's fine when the losses are low, but now that the losses are much, much higher, carriers are risk selective, and you need to make sure that you're actually advocating for what your business is doing and how you think about cybersecurity. What we're finding is it's kind of the 10 or 15% most immature organisations. They can't get that insurance, and that's deliberate. The carriers want to show risk selection. They want to show a level of risk that they're declining. But in the case for most of those organisations, they've got a lot of low-hanging fruit. Often you can work with them for 3 to 6 months, and we can actually get them to a point where they are insurable. We've personally found that every risk we've worked with on the last 18 months has been able to get terms, and that's some really scary things. That's defence contractors, it's online gambling companies, it's highly regulated sectors. We've got 5 minutes, so other thing I'll say here is when you do a proposal form, Don't answer no to 20 questions and expect to be okay. Each of those are red flags for the radar. So if you're going to do a no, contextualise it or explain what the mitigating controls and circumstances are. Very, very quick one from me. How do you actually go about getting insurance? Whatever the broker is, you should be engaging with them. You should think about the cyber very, very carefully, what the limit is, what you need. You should also decide what's the strategy, what are the key requirements, understand the exposure, work on the proposal forms, and make sure that when the insurer is asking you questions, you don't just say, oh, no, too difficult. They're asking a question because it's a red flag on the radar. That's the things we want to answer. That's the things that we want to push down. And finally, because you're paying a lot for insurance, get the confidence from the broker or the partner to understand what's being covered, what isn't, and make sure that you ask these questions because you're going to rely on this if you have a catastrophic cyber event. So it might as well be fit for purpose and providing good value. I think we're pretty good. Any questions for us?
Oh, thank you. Caught me by surprise there. So thank you very much. Can we have a round of applause, please, for Ben and David? There are a few questions online, so I'll start from the earliest ones. I'll ask it anyway. It might be a little bit tongue-in-cheek. Why will insurance cover ransomware payments but won't cover a stolen car when I left it unlocked?
Won't cover a stolen car when you left it unlocked. Well, normally for that it's because there's a reasonable precautions type of provision in the policy. Ransomware is a bit different. You can be as reasonable as you want, but again, it's a malicious actor that might have been scoping the environment for 6-12 months. I also think the thing about ransomware is we cover it because we understand how catastrophic it is for the business. For some of these businesses, it's a going concern issue. We don't pay the ransom because we want to, but particularly if we don't have backups, the options are catastrophic. So it's also about actually giving the business the opportunity for what might otherwise be a huge issue in the short term and the long term.
I was going to say too, the insured typically doesn't pay the ransom direct. The insured does pay the ransom. The insurer reimburses the insured for costs born out of that incident, which...
Yeah. So you pay the ransom yourself and the insurer can reimburse you after the fact. So it's always your decision and you always own it.
Oh, that's great. Because there's a question around, does insuring ransomware payments drive up ransoms demand? Should insuring or even paying ransoms be made illegal? And there's another question further up. Is it legal to pay a ransom?
I'll cover those too. So there's nothing that prevents you from paying a ransom generally. There can be interplays with anti-terrorism financing law. There can be interplays with money laundering. There can be interplays with sanctions, but that's very much based on who's it going to and what's the payment chain. So it's not illegal generally. The issue of does insurers drive up ransom payments, I've always thought it's a nonsense. The malicious actor is looking at leverage. The fact you've got an insurance policy really isn't here or there. If they've got your critical data and you don't have a backup, I've seen some where they'll base it on percentage of your overall revenue. But you always have these policy people that come up every 18 months saying, oh, the reason why the ransomware environment is so bad is because of insurance. If I'm a malicious actor, insurance is the 9th or 10th most important thing. If I've got your backups, if I've got stakeholder records, if I've got critical PI, that's the reason why you'll pay.
And are you seeing insurers recovering costs from dodgy security planning or dodgy audits or even dodgy CFOs, optimistic insurance proposals?
So I can comment on this. Do you want to have a stab?
Mine would be very vicious. Yeah. I think they're trying to do recovery, but it's difficult. And again, come back to my comment about MSPs and MSSPs being a very unregulated industry. The contracts aren't great and they're very airy-fairy, so it's hard to really point the finger, but...
There's always been a bit of a trend of how do we recover the losses for an organisation after they've had a cyber event. We do see a couple of these. They're quite hard to succeed in for the IT provider. I think we'll see more because of where the loss tails go. And as my good friends mentioned, you can often point to some really fundamental negligence, particularly if it's a security managed service provider when we have these critical events. So we'll continue to look at it, but it won't be the easy answer or the silver line bullet.
There's a few more. So how many insured invalidate their policy by not notifying their insurer?
You don't invalidate your policy, but the thing about it is notification creates your rights under the wording. So like all contracts, we need a trigger, a condition before whatever the counterparty is going to take certain steps. So where you notify early, we make the wording live, we give you the benefits. If you notify late, the wording will still respond, but there might be prejudice or you might have done things that weren't covered or things that the insurer could have managed differently. So you won't invalidate the wording, but you reduce the benefit that you get from the policy. So early notification is always the best idea.
So for those making an incident security response plan or playbook, that should be probably up there.
100%. And most insurers actually would like you to notify, even if it turns into a nothing burger, because they can assist you. Like this whole having a panel, again, for an SMB, SME, having someone who can fact check, the thing that you're freaking out about, means that if it is something, they're already there for the journey. If it's not, they've got intelligent teams that can stand that down. Do insurance providers allow for reducing premiums or excess if clients can show cybersecurity, mitigating controls or policies, etc.?
I'll cover that first. Maybe 2-3 years ago you would have, but right now for most of the insurers it's a minimum security requirement just for them to quote. If you don't hit the minimum, they don't want to touch you. In some situations there may be some small discounts, but the reality is the losses are so big and so significant, discounting is very, very difficult to justify, so very rarely now.
Cool. Do insurers care if an organisation has a policy of not paying ransoms, especially if it can be demonstrated that controls are in place and working?
I think insurers like the fact that you've thought about it, so if you've got some type of policy or agreed company strategy, it shows a level of preparedness, and that's quite good for an IRBCP process. You may have a different view. I think insurers will always look at that a bit cynically. I know a whole bunch of organisations that had a whole of business policies not to deal with extortions and ransomware payments. But again, if you don't have backups, if you've got huge operational issues, it's just not that simple. So it shows that you've thought about it, but insurers won't take that as a binding that you will never pay a ransom.
Fantastic. With that, we are out of time.
Sure.
Can we give a warm round of applause for Ben and David? So we are going to break for afternoon tea, and I did promise a dad joke. So I went camping on the weekend. I got some insurance, but apparently if someone steals my tent in the middle of the night, I'm no longer covered.